Hi, everyone. Hi, Brock, Hugo, Arena. How's everyone doing today? Not that cold in San Diego, although it only got up to 60 or so. Hello, Sinatra. Kevin, how are you? Yeah, we're worried about Paulie. As you know, he's in Texas and we haven't heard from him. No power, was 17 in his house. Okay. Oh, hi, Alex. Glad you're here. Alex will be our interview today. Zex for DAX 30. We haven't heard, I haven't talked to Alex in a long time.
Morning, Coach. I've been following Alex for a while on Twitter. I really like him, so I'm looking forward to this.
Oh, cool.
Morning.
Yeah. Paulie is as tough as the Texas landscape. Yeah, he is tough. All right, so let's talk a little bit. What's the best of Furu? Mustafa, what's Furu? Anyway, all right, so here's cable. Came off. Still not sure this is it. You know, we had even on some short-term stuff. Let's see the 4-hour. Yeah, still kind of looks like a flag that there could be another push up in cable. And when I was working with my mentees on Saturday, we kind of diagnosed this as an area between here and 2050 to try a long. I know we had this push up, but it's very possible that, see this little mini head and shoulders that Blake had last week that fulfilled objectives. Okay, so now we're back to the breakout level here. And now you could have, if you just imagine it, a larger head and shoulders formation. This still remaining the head now, but not the total formation, and perhaps developing some type of right shoulder here. Of course, you know, you start trading back under the big round number 120, you probably want to get out of the way. I'm not aware of the perspective change on SLV. I can say that I've heard that March deliveries could be an issue for that. Okay, something about London physical supplies, and they're thinking when the March contract starts to post deliveries, and I think it's supposed to happen about a week from now, the 24th, that's when a squeeze could happen as the March contract delivery notices start being posted for March delivery. So that is something I've seen, but I didn't know that they changed the construction of SLV. Okay. Okay. Thank you, Sansi. Anyway, looks okay. And this is right here, potential right shoulder. So we had that pop at the 61.8 level in the dollar, talked about it. Blake talked about it. I talked about it early in the day before this candle started ripping. And, you know, this is really, a lot of people are using the big round number as ending the case for a bear market rally and it being over. I think there's actually a little gap that I noticed. Yeah, there you, a little gap. Looks like it filled it though. So if the dollar is going to fail, this could just be a failing rally up here and right up here. So the turnaround Tuesday, scalp and S&Ps yielded quite a few pips. This was yesterday right here, guys. Okay. I think we're in the 50s. So, you know, there was 25, 30 handles on that. The question is, do we have a top? I just drew this trend line here yesterday. kind of a sharp wedge line that we broke out of. We had a 2-day reversal at 39.40 yesterday. To get a 2-week reversal, we needed all the way down here. 38.92 would give us a 2-week reversal. So we'll see. I mean, I wouldn't be surprised. Why should anyone be surprised if we try and rally this thing, right? Maybe 39.44 to 50, and then you're wrong over 60. I still think that there's a chance that correction is beginning. We still have some time left in the week. So we'll see how that plays out. NASDAQ weaker. It was yesterday. And someone was asking me about oil, about shorting the oil. And I said this, look at the daily RSI picture, right? And last year oil led. So oil's leading in the opposite direction now. And I said, well, what would you rather short? You look at this RSI picture with it at 80, and then you look at the S&Ps diverging. And if you recall from last week, when we were in this triangle, assuming that it may have been a 4 and one more thrust for a 5, and it tried to blow out the divergence yesterday, but it did turn back down, so it didn't blow out the divergence. So I'm of a mind to, I held on to some shorts. Thursday or Friday? I thought he thought that last week, Jay. Okay, because I thought that was a Tom DeMark day. I could see how that could happen. Here's 1, here's 2, and we could get another one. Okay, key date this Thursday, Friday. Okay, we'll see if it could do it. Yeah, I don't take anyone's call for gospel. I'm open to that being a possibility. And yeah, it won't confirm for the second time if we make a new high. I don't think the 4-hour will. We're at 61.8 support from here. Okay. 4-hour. Boy, you guys, I see it. Nice, Simon. So you're thinking 1, 2, 3. I don't know if I could call this 1. Okay. This looks more like 1. So maybe this is 2. Right. Anyway, you do on the 4-hour have some divergence, pretty glaring. And actually the second divergence, I just can't see this being a drive. It doesn't have the look of a drive. It just went there and moved sideways before exploding. So there are some details you need to know. You can't call everything. Yeah. Long grin. All right. So, Blake, how are you doing today? Sometimes I forget we just have this 30-minute window for everyone to get their thoughts in.
Yeah. I mean, I've got to get started. I mean, I don't have any time to speak anymore. Thank you very much, Dale. We'll see you later. I'm just kidding.
Okay.
Just kidding. But I'm going to take over here really quick. There are a few things I did want to talk about this morning. You were talking about, we still have some time that there might be a correction. There is, the markets are consolidating. I'm not overly excited about, the prospects of the markets reversing here. As you know, once we get down towards 38.70, that's when I start to get a little bit more concerned. Do you know what I believe is holding up the market right at this point?
The COVID deal?
No. I'm sorry. As far as asset classes, I still think Bitcoin surged above 50,000 a day.
Yeah.
This is really representative of one of the, this is the most, what's the way to probably explain it here? The most
speculative.
Speculative, right? Investment vehicle at this point, aside from Tesla. So when you have Bitcoin rallying, that's just that to me is representative of a fearless market. If we start seeing Bitcoin come under pressure, then I would be a little bit more concerned about asset prices at this point. And it's not like Bitcoin is the ultimate driver. I think it's just a great representation. And whether Bitcoin drops back to 35,000 or 3,000, that's not really the point at this stage. And you guys are going to have your beliefs on what you think is going to happen with Bitcoin. Personally, I think pullbacks are going to be fairly limited to, it may lose half of its value, but it's not going to lose 90% of its value at this stage. But that's just an opinion. But I think what the price action is telling us right now is the market is still very fearless. And if you look at crude oil is the other asset class that is just ripping right now. And, we hit new trend highs this morning. 4-hour charts are very divergent. And matter of fact, if you guys trade Canada or Norway, those currencies are actually kind of weak despite the rally in crude. So I have my skepticisms right now of where crude's at and why. But crude on the continuous contract, we're challenging some pretty good resistance. But more importantly, the 38% retracement of the 2018 high to the low is coming into play right now. Dale, when you talk about crude, I've been in the camp, and I'm sure a lot of you guys know this. I've been in the camp that crude's not going to zero. It's not going to be an asset class that's like disappears. There's going to be less relevance, but OPEC and other producers that are producing crude oil are going to continue to produce, and they'll manage production to a point to keep prices elevated at that time. Crude will become less and less. The world would be less and less dependent on crude oil in the next 20 or 30 years, but prices will never go to zero. And that drop to zero was such an anomaly due to storage, the storage situation, that I don't think we'll see that again. And if we do, it'll be very it'll be one of those random crises again. But I think crude it's going to be managed. You'll see prices fluctuate from probably the 20s to $100 level in the foreseeable future. Because all the producers are going to continue to adjust production accordingly. Does that make sense?
Yeah, it's not going away for a long time. I know there's lots of optimism about EV, but I mean, you could just look around the country and how things have shut down in a lot of places, especially Texas. Can't say that crude oil does run generators. So, we still need energy, and all you have to do is look across the country and see that there's still energy demand. Weather does it. Could be natural gas, could be crude, but we need fossil fuels still. Blake, I agree with you.
Yeah, 100%. But you know what that also means is in time, the countries that will be less wealthy will be Canada, Mexico,
Saudi Arabia,
definitely the Middle East, Norway, well, Stelios can confirm, or probably Steve can confirm. Unfortunately, Norway owns 1.8% of all U.S. equities. I think that's the number.
That's good diversification from energy.
Yep.
I mean,
don't you think?
Dude, they own almost 2%, if I'm not mistaken. My numbers might be off here, but it's something like this. They own 2% of all U.S. equities. How crazy is that, Stelios?
No, it's around, if I remember right, 1.5% of equities globally.
Is it really?
Yes.
I thought it was closer to 2%, but it's crazy, right?
Yeah.
Well, that would suck if that sucks if the S&P drops to 1,800, and you own and you're a big crude,
energy producer.
Yeah, but they have $1 trillion in reserves, and this country, right? They've been making lots of money on oil, and what do? They put it aside and they invest in it. They invest it, which is exactly what you should be doing. They're generating surplus.
They should be buying Bitcoin.
Let's just examine the contrast here. The average human being in the Western world, let's say in the US, is born with a debt burden of, let's say, I don't know, it's now like what, $40,000-$50,000. The average Norwegian is actually born with a positive
150,000, yeah.
150,000 from the sovereign fund allocated, in essence. If at some point they split it up among the population, they begin their lives with positive 150.
That's amazing.
So what happens if the S&P
really quick before you start going into a bunch of statistics, I do want to cover really quick, and maybe I should have covered this first, is I do want to cover the dollar Canadian ahead of the Canadian retail sale or Canadian CPI data. So we do have Canadian inflation data. Obviously, everybody's looking at inflation globally, and US came in. The numbers argue with, however the Fed, dissects their numbers, and they don't look at CPI, and they should be looking at PCE, and they spend more time looking at that, and the numbers should be, adjusted, blah, 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 all that crap. Doesn't matter. The market's looking at the number that is released and reacting from that. So we have to pay attention to the CPI today out of Canada. And again, you guys can throw out arguments about, what's relevant, what's irrelevant, what's not fair, and it doesn't really matter, because the data is the data, and pay attention to it. One thing about the dollar Canadian that I have to point out is technically we had made a higher low thus far. Yesterday was an outside day, not a bullish engulfing. It's an outside day. An outside day is a very, a pretty significant reversal candle. It'd have been more important if we would have seen a complete bullish engulfing candle, but it is it's an outside day.
But that can't happen in FX. Other than weekend, you can have bullish engulfing because we don't have gaps in FX.
Yeah, but sometimes it can during the rollover period.
It has to be some very big announcement, unexpected,
over the weekend.
Yeah,
it happens sometimes.
Yeah, but right now we have an outside day, which is basically a very bullish sign for the dollar Canadian. Higher low. Okay, so what I'm looking for now is if the dollar Canadian actually can. Let me remove this, because that was an 88% retracement. So now what I'm looking for is, if you take this high from the end of January to the low here, you'll notice that we're at a 38% retracement. That's basically the highs, roughly. So move above 127.20, I think will open up some upside. So let's just imagine that the US, Canadian or US CPI data came in worse than expected. If Canada's CPI comes in a little worse than expected, we might actually get a push above this 127.20. It's 127.15, but I'm looking at 127.20, and you can see there's an alarm set up there. I think that would be a very bullish sign for the dollar Canadian, and it's something that we should pay attention to. So anyway, I just wanted to bring that up because we do have CPI coming out today. Now we also have retail sales, and I guess I should, before I turn it over to you guys really quick. Look, the dollar, we pivoted off of the 618 retracement yesterday. That was a very strong reversal. That was a very strong move. I think if you were short the dollar, you were just slapped upside the face yesterday, because it just rallied aggressively. You see the dollar Mexican peso move. This is a massive move yesterday, and we're breaking higher right now. So, you see the dollar index really snap back off of the 618 retracement. This inverted head and shoulder pattern is not invalidated because we have held that right shoulder. We didn't break back below it. So it's actually still valid, which means it could still play out to 92.50, 92.60.
Back inside your channel too, Blake.
Yeah. So it's a throw over opposite, right, Dale?
Yeah,
so
some
now
longs threw up on the throw over.
It's a threw up over. So now you're at a risk on a break back above 91. You are a risk at a move back to 92. So I want to point that out because if retail sales come in weaker than expected, we're expecting 1.1% on retail sales. I don't like to bet against the consumer, but if we do get a weaker number, the dollar is not going to take to it kindly. The dollar may take to it kindly because I don't think the market's going to take to it kindly. So the dollar could continue to rally on risk aversion. We're in that dollar rallies risk off type of mood. So anyway, hey, I'm going to pass it over to you guys. I'm going to let you guys continue on with your conversations. Or I'll let you take over and I'll be here. I just wanted to make sure I covered those couple things before we.
Thanks, Blake.
Yeah. So I'm
looks.
Yeah. So now going back to Norway and how Norway is going to actually buy the United States at some point. What do you guys say about that?
I hope they do.
My view on what they've been doing is that yes, they've invested in equities, global equities, but it's like I have a friend who's a ship owner who owns a lot of stuff, and he's saying if markets go down, I'm just going to load up a lot more, and that's what they're going to be doing, right? Because they have reserves. So the S&P goes to 2,000, you can bet that they're going to be coming in pretty aggressively.
And keep in mind that they're not indiscriminately buying like all equities. They're not index buyers.
Yes.
They do value investing actually. So the number we say that they own something like 1.5% of global equities. It's like on a monetary basis. It's not like they go out and buy 1.5%. They've bought 1.5% of every single company.
I actually heard they're scooping up every SPAC out there, every one of them.
To be honest, they'd likely do very well for the time being if they did that.
Hey, by the way,
load up with SPACs and cryptocurrencies.
Yeah, there you go. Load the boat. Why not? Jump on the Momo bandwagon. Hey, I do want to mention, if you guys are ForexAnalytix subscribers, you might have missed the European crossover the last couple of days. Paul Franco lives in San Antonio, Texas, and he has been frozen over, and with the power's been out in Texas where he's lived. He's gets power for like an hour, off for several hours. It's obviously due to inclement weather. We're all wishing him the best. So when you hear from him in the next day or two, make sure you give him a hug or something.
I thought Texas was a warm state, isn't it?
It usually is, and that's why when this inclement weather hits places like Texas, and power goes out, it's because they're not equipped to handle it.
Yeah.
Especially in San Antonio, they're South Texas.
Yeah, they haven't built to withstand that kind of weather because they don't have it. Yeah, I know what you mean.
I mean, I live in Scottsdale, Arizona. If we had snow here and it was ice, we would probably shut down too. We're just and our Adobe homes would freeze. I mean,
same here. I mean, we had 2 days of a lot of snow, which happens once every at least 5 years, I mean, probably more. And there are a lot of areas that went out of power as well. Yeah. Because,
I mean, it's
financially speaking, it's not worth investing in infrastructure that you'll need for 2 days every 5 years, right?
Right. Anyway, so just wanted to mention that for those of you that are ForexAnalytix subscribers, because that is something that that's affecting you personally. Okay. Anyway, sorry. I'll let you guys go on.
Hey guys, so these things are called SPACs because I went out and I bought a pair of spats because they were popular.
Does it hold the fat in? Like Spanx?
Spats.
I know, but does it hold your investment fat in? I know
they're for my feet. They're shoes,
Oh,
spats.
okay.
You know,
I don't
gangsters
know those.
wear 'em. You have to be from Chicago and carry a violin case. Anyway, so okay.
Cool.
So we're
Thank you,
about
Blake.
5 minutes away from Alex. So Steve, Stell, take it
Okay,
away.
so nice bullish engulfing yesterday in the DXY, which actually can gap even during the weekdays because it's not trading all day long, and not nice gap up higher today. So yes, that likely constitutes a reversal. Nice rejection from the S&P yesterday from the channel and a very nice bearish engulfing. So, you know, we were talking yesterday about in the second part of phases, more significantly, about the importance of potential reversals. And, you know, the first thing that was needed, as we said yesterday, was to, you know, confirm by the end of the day that what looks like an attempt to reverse is actually going to follow through, at least to hold in during the day, because we've seen the days that, you know, open up like rather negatively, and by the end of the day, especially near the last few minutes of the day, magically, you know, you have, you know, the invisible hand just beating up and paring back the losses. Now, the fact that we closed at the lows, near the lows of the day yesterday in the S&P, same thing with the Nasdaq, and the fact that we held most of the gains in the dollar is definitely a positive sign for those that are looking for potential reversals, unquestionably. Keep in mind, though, that, you know, most of the strength in the dollar index still is coming through from the euro, and that is rather important because we know that it's not that the euro is very risk sensitive. I mean, it's not like a risk on, a risk of currency that much, right? So keep that a little bit in mind. In the so-called commodity currencies, we haven't still seen like a big reversal, although as I mentioned yesterday in the second phase of second part of phase, it is important. Blake already showed that it is important that USD CAD has held the lows. Somebody can say that it's even trying to put in here like a quadruple bottom or whatever. But in order for that to be validated, I would want to see a break through this channel, right? We haven't seen that yet. Somebody can make the same argument about USD NOK, right? Retested the lows. And most importantly, what was diverging even further, and Blake, I know, was all over it, is the USD-MXN, because the USD-MXN actually never even backtested the lows, built that consolidation, and it didn't manage to hold all its gains yesterday by the end of the day to actually close above it. But it seems to be doing the move today, pushing out of it. So, you know, technically speaking, it looks like the USD-MXN wants to, you know, accelerate higher and produce at least one more high from there. Now, having to do with the VIX, and that is also something we mentioned yesterday, it is rather important that the day before yesterday, the VIX closed at multi-year lows. And the next day, it actually gapped higher and, in essence, invalidated that potential bearish breakdown. Of course, as you see here on the chart, it's not like the VIX has exploded higher or anything like that. I mean, you know, we're far away from saying that, you know, we've actually reversed higher in the VIX. But keep that in mind as well, the potential of a false breakdown to multi-year lows. If we do see a continuation lower today in the indices, I think that, and we see the VIX put on a nice bullish day, I think that the possibility of that scenario starts, you know, significantly increasing. And
Still never filled that gap, Steve, at 19,
yeah,
18, 20.
And many times, as I was explaining yesterday again in second part of phase, which if you want to have access to, you have to be a ForexAnalytix subscriber. Even a light version gives you access to all our webinars. I mean, they're only for clients webinars, which are 3 of them.
So all your genius.
By the way, Dale, let me interrupt. We just got data. US PPI more than 3 times the expected. 0.4 was expected month on month. We got 1.3. US core PPI 1.2 versus 0.2.
Wow.
The year-on-year PPI is 1.7 versus 0.9 that was expected. The core PPI from 1.1 that was expected is 2%.
Wow.
US retail sales 5 times the expected. As you see, the market is actually reacting to that data. Dollar seems to be strengthening here.
Yeah, higher producer prices is going to lead to consumer prices.
Yes, exactly. So a lot. Here's the data, by the way, if you want to have a visual look at them. Here they are.
It's a
So as
sea
you
of
see,
green. Yeah.
as you see, deep green, as Stelio said, huge bits in all the numbers. I mean, especially PPI is like 3 times more or less what was expected.
Wow.
But of course, the Fed is not worried about inflation.
Not the way they measure it, anyway.
No, they want it.
Okay, let's have Alex on, and we can continue on phase 2.0, right?
Yeah. So to finish up the sentence, as I was saying, I think that we just need a couple of negative days for this to become more or less to get the snowball effect, because we know that there is a lot of complacency, a lot of one-sided sentiment having both to do with risk assets and somewhat with the dollar. So I think that if the equity bears manage to hold on for a couple of days and put on a couple of negative days, and if the dollar manages to put a couple of strong up days, we might actually see some profit taking in the market, and this might accelerate and produce some bigger counter trend moves. Okay, Dale, enjoy the interview.
Thanks,
Thank you,
Steve. Hi,
Steve.
Alex. Alex, I made you a panelist and waiting for you to unmute. I don't know if you've used Zoom before. I know you're here, Alex.
So there we go.
All right.
Great.
God, we shouldn't let this much time pass between talking to each other, Alex.
It was actually it was like
a year ago,
40% down and 80% up when we met the last time.
When was that?
It was February 2020.
Okay, too long.
Too
so
long.
You know, yeah, a year. All right. So Alex, welcome back. And do you know how to share here on Zoom? It's that green box. And you have a lot of fans following in here to see what you have to say. See the green drop box? Says share. So how have you been handling the last year with COVID and markets and bubbles? You know, bubbles everywhere, bull markets everywhere. How's this year been for you over there in Europe?
In terms of COVID, pretty well, because I stayed without an infection.
You stayed home?
No, actually not. Since I work in a system relevant business, banking business, I didn't have much home office, and in those volatile times, yeah, you have to be on the edge.
Okay. All right. So DAX is your wheelhouse.
Yeah, I'm still having my romantic relationship with DAX, and it's still quite good.
Yeah. So let me ask you, your romantic relationship, does DAX ever, you know, hurt your feelings, or, you know, do you ever feel rejected by your girlfriend that's a chart? Does your chart ever talk back to you?
My chart doesn't necessarily necessarily talk back to me, but my chart tells some lies from time to time. Like in real life.
Yeah. Okay. All right. So, where's the truth in DAX? Do you think that I see all your speed lines and timelines like February and March all the way on that red line?
Yeah.
So, for your GAN work,
Yeah.
are we in an important window? We've gotten a little correction in S&Ps, and some cycle guys are looking for highs. They were talking about last week. Some are talking about later this week. What's your GAN work telling you?
What actually I can tell you from GAN standpoint is that looking on the long term, GAN likes anniversaries, and we are pretty much in that 1 year anniversary since
COVID.
we had that COVID dive in the markets.
Right.
Yeah. So from speaking of the time window, we would be absolutely in that time window. The only thing is, market doesn't care about fundamentals. If it starts to dive, then probably because of a quick shift in the sentiment. So rather a psychological thing.
Okay, so it looks like some type of double top. Do you believe in it enough to assume risk on the short side, or are you going to wait for some type of rebound? Or looks like we have a couple little two drives. It's similar to the S&P intraday. What is this? 5-minute chart?
That's a 5-minute intraday chart.
Okay.
I'm actually using only the 5 minutes and the 1 day for the longer term timing, which actually is essential for the bigger time cycles, which I'm using. But on the intraday, we still have that all-time high here from last week.
Right.
Yeah. As soon as DAX doesn't close above 14,100 or above that intraday high, there is still a good chance that we go lower.
Okay. Could we? I see you're looking at about what, potentially down towards 13,300. Is that the level down there at the bottom of your chart? You have a lot of lines intersecting down there in the lower right-hand corner.
I give
February
you
21st.
I give you a better one. I give you a better one.
Okay, is that the dailies coming up? Okay.
So.
Okay.
So that red GAN angle sequence is actually the thing I'm looking for, respectively the model which has been calculated. In terms of timing, I think the end of March or the beginning of April is essential for some kind of low point.
Okay, late March, early April, potential low. So we could, the bias might be down until late March, early April. Is that what you're saying?
Yeah.
Okay. All right.
And it
go ahead.
It can take us for sure down below that January low. But I'm actually looking going like 12.5, 1300.
Okay, 12.5 to 13,000.
Yeah, 13,000. Correct.
Okay, because you said 100.
Yeah,
that would be a big break.
Correct. All right. My mistake. Sorry.
That's okay, buddy. All All right. So, and this is, are you just still trading the DAX? And even though you just trade the DAX, does anything that's happening in the currency market, for example, strong euro, weak euro, play a role in what's happening with the DAX?
Absolutely, yes. In the last couple of months, we saw that inverse relationship. Strong euro supports some selling on the DAX and vice versa. But I neglect those Forex things in general.
Okay.
It's different in my job because when I'm buying shares, when I'm buying US shares for the fund, I have to hedge the currency. So it's a little bit different.
Okay, it's a hedge, right? Okay. So is it your own fund that you have now, Alex, or you went to work for a bank?
No, I'm working for a bank in the asset management, and
okay. Is this new for you since we talked a year ago?
No, actually not.
Okay. All right. So what is new for you in the last year that we need to catch up on?
What is new for me? Actually, what pretty much changed is the speed and the velocity of the markets.
Faster? More velocity?
Sure. Faster. Sure.
Okay. Yeah. What do you make out?
We saw a drop in February, March last year, which we didn't see by that time in terms of price and time.
Okay, so that the COVID crash from last year, the Gantt stuff didn't reveal it ahead of time, so it was a surprise.
I wasn't surprised, no.
Okay.
I was surprised actually of the amount of the velocity, but I wasn't surprised that it happened here, because if you remember January 2020, we had fresh all-time highs in the markets, and there was some Middle East crisis brewing, etc., etc. And ultimately it was this virus. I remember when I said to you, don't underestimate that virus for the markets. We talked about it last year.
Okay.
Yeah.
Well, you were certainly right.
Quick, dirty, and heavy. That downwash. Well, then.
So you know what surprised me? The crash didn't surprise me. The recovery to new highs is what surprised me. Absolutely. How about you? Yes. I mean, I was trying to, I made some attempts at selling retracements off that break. I did see the bottom at 2,300 in the S&Ps, but I thought at the most, and people thought I was being aggressive, was, we could get back to 31. And I never dreamed that a year later we'd be talking about a 3,900 handle in S&Ps.
Yeah.
And what about, are there things going on in Europe that are similar to what's happening here in the US, like SPACs, new instruments, and social networks going in and attempting to raid and create short squeezes, any of that type of wild action, or marijuana stocks going from $5 to 80 in a month? I'm talking about Tilray, and we have this big boom in crypto. I know you've been doing this for a while. Have you ever seen more bull markets in all asset classes in your career, that almost everything's a bull market except treasury bonds?
I'm always saying I'm doing that long, must be like 17 or 18 years by now. I have seen everything, but I'm wrong. wait in 3 weeks, another black swan appears, which we didn't see by then. But coming back to your question, I think you cannot compare the European financial markets to US financial markets. Speaking of Bitcoin or that GameStop Robinhood thing,
yeah, that doesn't happen in
no,
in European bourses at all, huh?
No. I think Europe is pretty much happy with those overregulated financial markets, and the Europeans keep drinking beer and yeah, you know.
Maybe that's where we're headed. You know, we do have a new regime. I guess you could call it a regime or an administration.
Yep.
New SEC chairman. So it is possible that maybe we're going to go to more of a European model to calm things down. You like the Wild Wild West in the U.S. Is that correct?
Actually, I like both models.
Okay. Which is easier to trade? Neither. Which one's harder to trade? Both.
No, you're right. Neither, because why? Because you do not trade fundamentals anymore.
Yeah.
I learned it the other way. You trade sentiment, you trade psychological
momentum
things. You can't even trade like some catastrophes anymore.
Huh.
Bad news or good news?
You can't or you can?
You cannot.
Where, in Europe?
Everywhere.
Oh, you
Doesn't
mean that
matter,
those?
Europe or USA. I mean, this COVID situation is in fact getting worse since the beginning 1 year ago. And does the market care?
Yeah. They take any relief from higher highs of cases and spread as being bullish because, you know, now in the U.S. we're at what used to be unheard of, 50,000 cases a day, down from 250. And what's happening over there? What are you hearing about variants over there? Is the UK variant spreading across Europe?
It's spreading quite well. Even in Austria, it's spreading quite well here. But we also have some troubles with that South African variant.
Yeah.
Well,
are you going? Let me ask you this. I think you've probably looked into it. Are you going to accept the vaccine and take it when it's available to you?
Based on the data which is available by now, I won't accept it in this stage.
Okay.
Because probably you remember I have that medical background from my job, and it's not secure for me.
Okay. All right. Well, thanks. I already got one dose. So let's go to your example of a solar year.
Yeah, because my audience probably expects talking about my yen things.
Yeah.
Like I told at the beginning, solar year, Gann defined the trading year not to start with January 1st, but with the March equinox or solstice
Okay.
on March 21st. So
I see.
This pretty much comes in line with.
And that was a low, wasn't it? That was a low.
It was a low. Actually, it was a low. You're right. So that's what I'm saying. Actually, it's coming in pretty much in line with that big turning point we had 1 year ago. So that's another reason why the whole situation here in the market is getting interesting. So
okay, so
yeah.
the anniversary date this March is as well, the spring
Correct.
equinox.
Yeah.
Equinox, what, March 21st? Because you have April Fool's Day down there, April 1st.
Correct.
So close enough, right?
Yeah, close
For
enough.
government work.
Yeah.
Okay, so the anniversary of a low can invert at the end of a solar year. Am I interpreting it correctly? Or could it be a low, or we could sell off into that
Yeah,
level?
let's be general and say we're talking about the turning point.
Okay.
A major turning point.
Okay, and
Or
we
a
don't know
major
which
turning
way.
point.
We don't know which way until we approach that date.
Correct.
Okay. Anything else you want to share with us today, Alex?
Oh, there are so many things I want to share, but just the principles. Why GAN? Why I do GAN? Because I was looking for some kind of scientific approach to the stock market. I'm not trading the stock market because the stock market is here, or I'm trading. I'm not trading a share because the stock is here. For me, it's something where you can also apply some kind of natural sciences, and those three big aspects on GAN trading, like the mathematical aspect, the geometrical aspect, and also the astronomical aspect for doing the timing, actually, because the universe or the alignment of planets, etc., in fact, is the best or the most accurate timing gadget we have. So
wasn't there a big, unusual, rare planetary alignment last Thursday? I think Norm Linsky was talking about it, about having 6 planets in, I think, Aquarius last Thursday. Is it something you were aware of, that planetary alignment?
I heard something about it, but I have, some special constellations with which I use, and I'm not freaking out when there is. I mean, there is every day there is some kind of an alignment. Yeah.
Okay.
But I did research on it, and I found some, let's say, not insignificant alignments, which I personally use for a timing thing.
Okay, and are they planetary oppositions? I know GAN was big on oppositions.
Yeah, correct, and that's also a point why the period from March 21 to April 1st, because not only the end or the beginning of the solar year is supported by this, but also some certain planetary alignment constellation to reset this cycle.
Do you know what people are talking about, Alex, when they, there's all these videos out and people talk about the Great Reset? Could you explain it to me and my viewers, if you know what their expectations are for a Great Reset? Do you know what I'm talking about? No is a fine answer, but yes, you do.
I heard of the term. This term is not so common here in Europe, but I mean, it's not illogical if you look at all the central banks' money in the last decade since the so-called financial crisis after 2008, after the Lehman crash. I mean, they got more creative every year when doing some QEs or PPEs or what the hell. I mean, personally, the only thing which actually could help the financial system is probably that great reset.
And what is the great reset? A move on a different reserve currency, is that part of it? Is it a jubilee in debt, forgiveness of debt? Is it defaults? What is it?
Mostly, I'm thinking of debt.
Okay.
Because
so
no
forgiveness,
one can pay this back.
No, I could.
Oh,
if you give me 1,000 years. But yeah, so then we're talking about all the debt and everything that's increasing, the magnitude of debt and percentage of debt to GDP, that it's going to be some, Scott, if it's debt, it's also currency, don't you think?
Yeah, probably yes.
Okay. Do you think the dollar survives? And let me just ask you one thing. There is a lot of dollar bearishness. Not many people, besides people that talk about that milkshake theory, which is bullish the dollar, as you know, dollars are in demand. But I'd say most of the investment community, it's hard to come up with a scenario that would be bullish dollar, unless what we started to see in rates is just the beginning. You know, rates have tripled on the 10-year. Any view on what's happening on interest rates, Alex?
At some point, they have to rise again. But as you said, that dollar bearishness, you know what happens when everybody calls or gives the dollar up and calls that dollar bearishness. Yeah.
Well, people have been talking about the demise of the dollar since the 1970s after it came off Bretton Woods.
And this will stay like this, I tell you. Somehow the dollar will survive. I'm not sure with the euro. I'm not sure the euro will survive, at least not in this configuration, because we have 20 plus economies in the Eurozone, and every economy is in a different shape. You know,
I've interviewed a guy who thinks that the next financial crisis is going to come out of Italy with some banking problem out of Italy in this spring. Are you seeing anything in that particular country or financial system? I know that, you hardly get any yield on their bonds, and they don't exactly have a high credit rating. Is there anything that you see happening in Europe that could trigger a confidence crisis in the euro coming up this spring?
Let's say it definitely won't be Italy, because they have Supermarine now. So Draghi will save Italy. No, I'm joking. It will come from the banking system, because when you look, not necessarily Italy alone, but retail banking in the last year, while the COVID crisis, all those private loans which are out now, the people didn't have to pay them back for 1 year. But still, everything is closed here. There is not really any change. So banks are losing money day by day.
Yeah. Well,
and
Alex,
it starts right on Main Street. It's not starting on Wall Street. It's starting here on Main Street. That's the problem.
Okay, and you want to just give us what this last chart, again, it's the example of the solar year.
No, that's pretty much that ultra long-term gain projection of the German DAX, beginning right here at the 2003 low, which I find quite remarkable when you take that geometrical aspect and bring price and time in a relation, in an order, which is shown here by that light blue GAN sequence. Actually, we had that post subprime low in 2009, right on this line, and
Nice.
recovered from here. So
maybe we could get back down to that line again someday. You think that's a possibility? That'd be a pretty big hit.
It actually would be.
We didn't get there in the COVID crash.
It would be healthy for let's call it the reset. But it wouldn't be healthy if we do that like in 6 months or 8 months.
Better if it's stretched out over years.
Process and
yeah, you don't want to panic, but if it's long and drawn out, rather than have a heart attack, it would be better for it to have cancer and survive it.
I think it's the natural cycle of every economy. You have up phases and down swings. That's pretty natural. The
last year doesn't look natural when compared to the rest of the chart. It looks disorderly, doesn't it? Violent.
Absolutely.
Yeah. So what they say that bottoms are made in silence and tops are made with violence.
Yeah.
Right. So we have some violent action. I'm so glad that we had a chance to talk, Alex.
Thank you.
Gave us some great time periods to pay attention to, and I'm just going to get you back in the rotation, and I'll DM you a little later to get you back here in May and see how things played out. Okay.
Okay.
All right. So everyone, Alex, do you use your last name when I, put out your videos, or just want to go by Alex?
Alex is fine. Absolutely fine. Okay,
because my associate Steve Volge asked me for last names, but that's okay. So everyone, you could follow Alex on Twitter, and his handle here, I'll post it in chat. As Stelio said, he recently started following Alex, and he enjoys them. So here's Alex's Twitter handle. Okay. Your DS says you're a ledge, which means don't jump off it. No, I think he means legend, not ledge. Because if you're on a ledge, you could fall. So thank you again, my trading warrior brother, for hanging out with us.
For having me. Thank you.
All right, buddy. So that's a wrap, everyone. Enjoy the rest of your trading day. I don't know if Mark Newton's going to be right. S&P is under some pretty good pressure. If you took the short from yesterday, you have about 30 handles. I'm a big believer in partial profits. Take half and pull your stop down so you can't lose money. And that's a wrap. Remember, don't just count your pips, count your blessings, and we'll be back with you tomorrow. And you could join the rest of the team for FAME, ForexAnalytix members experience, I believe, in about 15 minutes. So you'll get Blake's bias chart and the rest of the team batting the ball around. And for me, that's a wrap. Everyone have a great day. You're very welcome, Mustafa. Chris Smith said that you're thought-provoking, Alex. So keep that romance going with DAX, because people want to know how things are going. And it's snowing in Jerusalem, snowing all over the world. I guess this is the beginning of the new ice age. I posted it there, Dolce. It's right there in chat. Okay, Steve, we're done. I think you could end it. I don't know if I...
See the rest of you in 10 minutes.
Oh, solar minimum. Okay.
Bye-bye.
All right, Steve, shave. Look at your picture. Will you shave your picture? All right, buddy.
Ciao, ciao.